If you've ever taken a trade based off of a traditional chart setup, like a higher low, lower high, inverse head and shoulders, head and shoulders, something along those lines, and it didn't work out for you and you got stopped out and you were left wondering why it didn't work, well, I'm going to show you exactly why it did not work out for you. My name is Pat Mitchell. I have been a professional trader for the past 11 years, and I'm here to give you high-level professional day trading content, all here for free on YouTube and on X. So without further ado, let's go into the charts. Let's get into this lesson. I'm happy you guys are here. Okay, so now that we're into the charts, we're going to talk about three specific really well-used, well-known chart patterns. We're going to be going over the head and shoulders, the inverse head and shoulders, and the higher low. Those are probably, and you could even like put in the double bottom into that higher low, but we will specifically talk about a higher low because that is on a scale of strength, slightly stronger than a double bottom. And I'll explain why when we get into that. So a lot of people will take these chart patterns. And I've seen this through the years where people think chart patterns are a strategy. It is not. So first and foremost, I want to clear the air. This is a video about chart patterns. Now, if you pay close attention, you should be able to piece together a strategy based off of these chart patterns. And then that's okay. Remember, strategy above all. Strategy needs to come first. We cannot just take chart patterns. So number one, that is the reason why your chart pattern that you executed in a trade most likely didn't work out for you because it was strictly a chart pattern based off of no strategy. Okay, so that's number one. That is the number one fail point. So now we're going to go into points and explain these three chart patterns. So first of all, let's talk about the daily chart. So the daily chart is the left-hand blue chart that I have up on this screen. And we need to think about these three chart patterns. So let's start with a head and shoulders chart pattern. And what that looks like is going to be like this. Okay. And then what this chart pattern is it strong or is it weak? Is it bullish or bearish? It is a bearish sign of strength. Okay. It is a lower sign of strength. The next direction, generally speaking, on a head and shoulders is down. Okay. So that's first and foremost. So let's start there. If we know that this chart pattern, a head and shoulders, is weak, what do we need to look for on the daily chart? This is how we need to start breaking things down as day traders, or any type of trader for that matter. You need to break it down in terms of strong and weak, and we then need to go over to the daily chart. And remember, we're not doing this in hindsight. We are simply looking at lows and highs on these charts. So let's label it 1, 2, 3, and 4. If we're looking for a bearish chart setup and chart pattern, what numbers on these charts would you say that you should be looking for that setup? I'll give you a second. Well, it's number 1 and number 3. We want to be looking at extensions before a pullback, right? And extensions before a pullback. We don't want to be looking for a weak setup, chart setup, when we're looking at strength on dips. Okay, so that's really important. One of the reasons why your chart setup that you executed, maybe one of the reasons, but probably the reason, is because you're looking for it at the wrong time on the daily chart. That daily chart is so crucial and it's so grossly overlooked. So now let's talk about how we would execute this. Okay, how we would enter into this trade. So I'm going to pull this back just because it's going to be far easier to draw this out for you guys. So we have a level of resistance and a level of support. This is pre-market. over here. This is regular hours over here. So market opens up and we shoot up, okay? And it comes up and then it does one of these, right? Kind of gives us an area here, right? And we have our head and shoulders. So where a lot of people will execute or not execute this, they execute solely and strictly off of just that chart pattern. That's a big mistake. We need to look for a proper signal to get in based off of technicals, horizontal or trend, support and resistance. In this case, resistance. So let's redraw this. So let's say we open up again, it pops up and it comes right into that level and rejects, it pulls back. Now it shoots back up, pulls back, maybe it holds for a sec, but ultimately comes down, pops back up, maybe comes plus or minus into that, and then it comes down, okay? Do you see how it's actually following support and resistance within tolerance? That's how we want to execute. So how would we execute this? Well, if you're going to execute based off of a chart pattern, okay, the head and shoulders, I'm going to draw this one more time for you. Let's come up, let's reject, let's pull back, let's come above, and then it pulls back again. So now this is where we need to be paying attention, okay? So if you're looking for that and it comes up, as it comes into its high here, its shoulder, and if it lines up with a technical level of resistance, close, it doesn't have to be perfect. I'm drawing perfect, but it doesn't have to be perfect. You would then execute coming up into that resistance level. And then you would simply, as it comes down, you pay yourself back into here, right? Because that is the proper and professional way to do it. And then obviously you can leave some on. Your next target would be the open, and then possibly a greedy target would be down here. Now you might be asking, well, what is your risk on this? Well, if you were to execute here, right, into that shoulder, that previous shoulder, you have to risk highs. You have to. So let's give an example here, because this is another reason or another way that a lot of people can mess this up. Let's say this is right on cues, the chart that I'm drawing on, and it's like a almost $600 stock or ETF. We need to be within a risk tolerance. So this, from our area of execution here, which is, let's call it 579.28 right here, up here, that is 581.32. So you're looking at about a 2-point risk. Should you execute that? Probably not. I don't think it's worth it. Why? Because if your risk is 2 points plus confirmation, you're looking at about 2.25 points. Your main target is here. And how far away is that? Well, if that is 579.42 and your main first target is 577.62, it's close, right? Like it's almost at that 2 points. So it's a 1-to-1. Maybe it's worth it. If this is a really solid right up at highs, you could probably take it. If it's right up at highs on the daily chart, sure. But let's draw this out just a little bit higher. Maybe it's up here. Now you're at 2.5 points. No, wouldn't take that. So now let's talk quickly about sizing. And I'm not going to go over the sizing on each and every one. I'm going to be doing a sizing webinar coming up here actually in tomorrow. And you guys can always look back, because by the time this is released, the webinar will be out and you'll be able to go back and look on the channel and go find it. And I'll talk about sizing and everything else. So on this here, I'm going to clean this up and just quickly redraw it just to keep it nice and clear. Sorry about that, folks. So let's open up. Let's do this again. Maybe the head is only here. So you've executed this. You're risking off these highs because it is acceptable. But let's say this head is only 50 cents. It's a very tight risk. Well, you could definitely size in a little more. We size according to our risk. So now let's review the head and shoulders. Number one, we are looking to execute this trade when we are up at highs on peaks and not valleys. Number two, we want to line our shoulders and our execution in and around technical resistance. Okay. And I will explain where a lot of people will fail in this, because a lot of people, let's say a lot of traders, they'll make this mistake. And let's say it comes up, it comes down, and then it pulls something like this, right? Now, sure, you could execute that. It could come down, or maybe you're just seeing what you want to see, because there is support here and there's support here. And it's very easy. Just because you see a head and shoulders doesn't mean it's going to come up. Like if you saw this exact setup and we were down at lows, I would not be taking that at all. It's probably going to rip your face off and come up and stop you out very easily. Okay. So it's a matter of really lining these things up. And then you might have the question, well, what do you do if it doesn't line up? Well, that's a very simple answer. Don't take the bloody trade. Like at the end of the day, it's all about choices. As traders, we have the choice to not take the trade. If it doesn't line up, don't take it. Too many people just want to fire off and just execute any trade willy-nilly because they are desperate to be in a trade to make money. And that is not the way to do it. We don't trade to make money. We trade for process. And then the process and the profit is the byproduct of the process. And that's where a lot of people get their mentality all screwed up. So long story short, that is the head and shoulders. Okay, so the head and shoulders can be a powerful chart setup if you line it up properly. So now let's talk about the inverse head and shoulders. So again, if we have 4 areas on a chart that I am marking out, and I understand that this might get a little redundant, but hey, I want to make sure that you guys fully understand each and every chart setup. Where would your best odds of success be for taking an inverse head and shoulders? Remember, an inverse head and shoulders, and I'll draw it out here in a second, is a bullish or strong signal. Well, you would want to be looking for that chart setup in and around 2 and 4, not 1 and 3, right? So again, let's say we're working with this level down here, right? And we're all the way down. We've sold off again right down into this level of support. And that's this level of support. And then, of course, we have a level of resistance. As day traders, we always have a level to go long and a level to go short. And I'm not saying that there aren't shorting opportunities, but I am specifically speaking about chart setups on the day. So we open up, market opens, it comes down into the level, and let's say we bounce. This happens a lot, and I'm going to explain why. So when we bounce, next it sells off. Okay. Then it's going to come back up, and then it's going to remount and push. This is a powerful chart setup if you line it up with the daily chart. And I'm going to explain why each one of these happen. I'm going to explain 1, 2, and 3, why they happen. Okay. So number 1, this is your first test of this major support level, right? There will be buyers. There will be. You will get a bounce there. This is why I personally take trades coming into the level, and then I will manage the risk and manage that trade after. So on this trade, it'll bounce. You have to pay yourself, lock in. There's actually 2 separate trades here and possibly 3. So you want to lock in on that. You want to book your profit, because if we are at lows, it will have to prove strength. This is where a lot of people mess this up because they think that initial bounce is just going to rip your face off and come straight up. Sometimes it does, but a lot of times it needs to pull back and prove that it is truly strong. Okay. So on this here, it bounces, comes back down. You're going to have a lot of people adding here, and it's acceptable to add there. That would be as it's coming back down into confirm, you can add. Where retail traders completely shit the bed on this is when it fails, they freak out and stop out because they have absolutely no risk strategy. And there's a lot of educators out there that are telling traders to stop out as soon as that support breaks. That is a big no-no. You will constantly get stopped out of trades that you're going to sell the bottom just for it to come back up. You need a proper risk strategy. And that's a whole different topic of discussion. But on this, you can start back in. And if it wants to come down, you can now be patient or simply add into the wash. Again, that's a whole other level of conversation here. But what happens here and why it breaks this level is institutional traders, smart money knows that dumb money, retail traders, have absolutely no risk strategy. So the second that breaks, they can scoop up that liquidity. And it's easy to do when you're trading with massive size like institutions can. They can simply see the stops like you've heard 1,000 times. They break it. It doesn't take much to break it. They spend $1 million to make 10 million, right? So they'll spend $1 million on selling. It'll break. It'll take all those stops out. It scoops down, and then they come in and start buying lows. They do it all the time. So that's why that break of support happens. And then again, you don't need to add down here. Wait, be patient. You're going to see the signal. And this is where you need to get in. Not on the way up. Don't chase it up. It's going to come up. It's going to bump its head right into that that resistance. And then it's going to pull back. And as it pulls back into that very valid support level, this is where you add. Why? Because it's going to hold. The smart money has already played their little games. They've already stopped out all the weak hands and all the retail traders that do not have a fucking plan. And then that's why this here is your real entry. It is now proven that it is going to hold support. And this is where you're going to see a lot of volume come in, period. And the volume, you'll see it'll continue up. Now, you are not to add and execute on the way up. That is dumb money retail chasing nonsense and bullshit. We enter into support levels or resistance levels, and that is it. You do not chase this stuff up. The inverse head and shoulders for a chart setup, and I don't trade chart setups. I will use it in combination to line up my strategy. Okay, there's a big difference. But with that said, with this, it's one of the most powerful out there. This, if you line it up with the daily chart and you do exactly what I've shown you here, the odds of a successful trade are greatly increased. Okay, doesn't mean it's going to work 100% of the time, but it does dramatically increase your odds of success. And that's what this is all about. We don't need to always be in trades and always have them work. That is impossible. That is a unicorn. That doesn't exist. We don't strive for perfection. The market isn't perfect. We don't go for that. Okay. So that is the inverse head and shoulders. So what we want to be looking for is to execute coming down into a valid level of support. And then you can continue to work the trade. When it breaks, don't freak out. It's part of the natural movement of a setup like this, especially down at lows. They want to stop you out to create liquidity. Okay. So don't fall for their trap. Have a proper risk and proper risk strategy in place. That's something I can help you with, but not in this video. And then wait for the remount. When it remounts that support level, that's your go signal, man. That's it. It's beautiful. Works extremely well. So now let's discuss number 3 on the list, which is the higher low. I'm also going to throw in a double bottom, but if we want the most powerful of chart setups, the double bottom is slightly weaker than a higher low, and I'll explain why. So this is a bullish or strong signal, and what it is, it will look like this. We'll have a low, it'll pop back up, and then it'll pull back and hold just slightly higher than the previous low. Now, let's talk about maturity first. What a lot of people will do when they're executing these trades is they'll look for any excuse to get in. And what they'll do, let's talk about the higher low. It'll do that, and then they get in. Well, that's not a higher low, right? We're talking about proper chart setups, not micro setups. We're looking for maturity in these setups. That's where the best odds of success are. So on this here, if you have, again, let's work with this support level, because again, that's where we would want to be executing a trade like this, okay? And then you have your resistance level up here, pre-market's over here, regular hours. So market opens up, we race down into this level. Normally I would be executing this. It comes up, it retraces, it bounces, giving a nice showing of strength, comes back down. And you see, what you want to be looking for this is slowing in the selling as it's coming down. You're going to have volume down here, and I'm going to draw your volume bars. So we'll do 1, 2, 3, 4 volume bars just to give you an idea. And I hope you understand what I'm doing here. So the first volume bar on the sell side is going to be quite high. The next one coming down, when that confirms, it's going to be even higher. And then you want to look for signs of slowing. And I might have drawn too many, but you want to look for that descending volume. It's slowing down. And then once it comes down and you start, these are red candles on the way down, then you're going to start seeing an increase, and it's going to go whoop on the volume because people start buying this. Okay. Now I'm going to redraw this, and I'm going to make it really exaggerated just so then we have a lot of screen space to work with. Okay. So it comes down. Okay. So that's what we're looking for, right? So on this here, it bounced off that support once. As it comes down, remember on this level here, remember this is a very valid level. You're going to have all of these traders already in, and orders will be set on the day. The smart ones are getting in here first into support. So what you have as it comes down, there are orders. There's always orders in and around. And as it comes into that level, these orders get thicker and thicker. Okay. There's more, meaning more volume. Let me give you some context here. If this first block of orders is only 100 shares, and I'm going to use small numbers, the numbers are way bigger, but just to put it into perspective, the first is 100 shares. Next, as it's getting closer into support, might be 300, and then 500. And then once it comes into that level, you're going to have a lot of volume there. Okay. There will be a lot of orders sitting there waiting to buy that price point. So if that started here at 100, this is 10,000. That's how much volume, extra volume would be sitting there. Now, those numbers are obviously just goofy numbers that I'm trying to use to put into perspective what's actually sitting there. So if all of the retail traders that bought this on an intraday level, right? Now there's swing traders and investors that will be in this as well. There would be a lot of volume there. As it comes down, people are willing, especially if they've already bought this. And then more importantly, the people who missed this in the morning, they missed the actual execution. Now they have FOMO. They want to get in real, like as soon as they can. They're going to start getting in on any pullback. And as it comes down, it's going to get thicker faster. It won't wait for down here for all of those orders to get in. People will get in a lot sooner. Those orders will become quite thick. And that's why on this, a double bottom is slightly weaker than a higher low. In gauging of like strength of these setups, a higher low is a powerful setup. It's telling you that this thing is ready to rock and roll. Okay. So now let's talk about how you would actually get into this. So if you didn't take this and you're taking just the higher low, you need to remember everything I just explained about those orders there. We never wait for the double bottom. We have a support level. If you're a technical trader, you're not waiting perfectly for support to test. That you're going to miss all of your fucking trades. So if we know that it is already tested once at a super valid support level, right? As it comes down within an acceptable and tolerable amount of risk, you're going to start averaging into this. You're not waiting for this level, guys. You're going to miss it. If this is truly strong and it is an extremely valid support level, if you wait for this level to test again, you're going to miss it. So now you might be asking yourself, well, what if it does come down? Well, who gives a shit? You still have support. Like, quit worrying about being red in a position for 15 minutes. Who fucking cares? Execute your initial trade. Don't load in. Don't be using massive size, and work and manage the position. Because if it does want to come in and test this level of support, you simply add. That's it. It's still valid. It's still above support. Get your position in. It's fine. I think one of the issues is too many new and struggling traders. They have such a problem with staring at their P&L and whether they're drawing down in a position. Guys, you got to get over that shit. Simply execute. And again, these are chart setups. You should never be taking just a chart setup. It needs to line up with a proper and focused entry strategy and then your core strategy. It's important. Plus, you need a proper risk strategy in place to manage this trade. And then you need to know what happens if this doesn't work out. So if you go over to my webinar video on how to execute these trades, how to properly enter, properly profit take, the whole nine, in that webinar, I'm going to show you exactly what to do if this chart setup doesn't work out. In fact, I took a trade like that yesterday on Qs. Sometimes these charts fail and you need to be prepared for that. And that's one of the things that I offer. I don't just offer a trade plan that needs to work. I offer a contingency plan that if it doesn't work, I can manage this out, as well as anyone else that is trading that stock. They can manage their position out. And that's a beautiful thing about proper and professional day trading education, and you're working with a coach. So I hope you enjoyed this, guys. I hope you now understand how to line these up, and maybe some light bulb moments have popped off. If it has and you got any type of value from this, please like and subscribe. Now, if you want to become a part of a winning team and work with a proven coach that's been doing this for over a decade and actually gives a shit whether you make it or not, and as a bonus, can actually teach, come to TrickTrades.com. And if not, you want to continue on just with the free stuff because you're stubborn, go ahead. That's why I have over 1,000 free videos on YouTube. But it's going to take you a whole hell of a lot longer. So if you have all the time in the world and to achieve your freedom and your trading goals, by all means, stick with the free shit, guys. But for the real guys out there, come to TrickTrades.com and I'll see you on the inside, folks. Adios.